Hello everybody, Michael Quinn's my name. I'm a director of the Quinn Group. Well, the countdown has begun to the end of the financial year. This month we're emailing all our business clients our end of year tax planning checklist. I want to spend some time this month going through some of the most important review points on this checklist. For all businesses, you'll need to review, first of all, your bad debts. Bad debts need to be minuted before the 30th of June. Motor vehicle expenses, you need a logbook for each motor vehicle. That logbook needs to be kept for 12 continuous weeks and has a maximum shelf life of 5 years. Travel and accommodation. If you've travelled away during the year for more than 5 continuous nights, whether it be interstate, intrastate or overseas, you need to keep a travel diary. Wages and payroll tax, they need to be reconciled. You need to prepare payment summaries and provide these payment summaries to all employees by the 14th of July. You also need to have your annual reconciliation of payroll to the tax office no later than the 14th of August. Directors' fees, if you're paying those, they need to be properly minuted and paid before the 30th of June. Superannuation, goes without saying, that needs to be paid before the 30th of June. Don't leave it to the last minute. For employees 60 and over, you can pay a maximum of $35,000. For employees aged under 60, it's $25,000. You also need to review your shareholders' loan account. It must be in credit. In other words, the company owes you, the shareholder, that money. If it's in debit, then Division 7A tax may apply. For SBEs are small business enterprises. They're defined as enterprises with turnover of less than $2 million per annum. You can make asset purchases this year of up to $6,500 and get a straight tax deduction for those purchases. You can also prepay 12 months' expenses in advance for expenses such as insurance, rent and leases. Like super, these must be paid before the 30th of June. For discretionary family trusts, we need to prepare a trust resolution prior to 30th of June, so tax planning is very important in that regard. You also need to conduct a physical stock take before the 30th of June. You need to consider the 3 valuation methods as to how you value that stock. And if you have any obsolete or unused stock, unusable stock I should say, then that needs to be written off. Fixed assets also needs to review. You need to review your fixed assets register or your depreciation schedules and determine whether any assets can be written off. If you have any unearned income is defined as income that's been billed before the 30th of June where the work hasn't been performed before the 30th of June. If that's the case, that income can be transferred from the P&L account to the balance sheet. If you're not a Quinn's client and you'd like a copy of our tax planning checklist, you're welcome to have that. Just get in touch with us. Once again, if you need anything in relation to accounting, tax, legal or financial planning advice, we're only too happy to help. Just get in contact. As always, we would like to get your feedback, so if you would be able to like, comment or subscribe to Quintessential TV, we'd love to get those comments. Thank you very much for being here this month, and we look forward to talking with you again next month. I'm Michael Quinn. Bye for now.